Hello friends, in our previous lecture we have started learning how to write a journal entry or how to make its debit and credit effect and how to write in the journal book. So now we are going for the next type of sums. Now friends, the entries which we have written had one thing, that in debit side one account and credit side one account. Now friends, there are some transactions where there are more than one account on debit side or one account on credit side. At that time we must note down only one thing, that the total of debit amount should be equal to total of credit amount for the journal entry which we are writing, and such journal entry is known as a combined journal entry. So on page number 61 that thing is given. Let us read. Generally for each accounting transaction, separate journal entry is passed, but sometimes only one account is required to debit or credit more than one time. When multiple transactions take place in day or during specific period of time, in this case, instead of passing separate entry, only one entry is passed, is known as a combined entry. In brief, when two or more than accounts are associated for a transaction, in such a case combined journal entry can be passed. Please underline that sentence. In brief, when there are more than two accounts associated at the same time in any accounting transaction, a combined entry is passed. As I said, more than one account is affecting, then we need to pass that combined journal entry. Now one example is given. On 15 January 2015, wages 300, salary 2000, telephone bill for 500 are paid in cash. We are paying in cash, so cash is going out, cash is credited. So cash is credited. Now for debit effect there are three expenses. So first way is that wages to cash, salary to cash, telephone to cash. We can write in that way. But now if you think that in all the transaction cash is credited, so in a combined journal entry cash is credited and debited all the expenses and with the total amount. You can see in the combined journal entry. Okay? Yes. After that, the journal entries are classified according to different transactions. Yesterday the question which we have learned was of basic entries. Now from today itself we are learning the journal entries according to different types of transactions. This is because for your better understanding. In exam I will not ask like that I will not give the heading these are transaction related to it. I will just write a sentence and you will write to journal entry. But for instance, for learning it very well, we are practicing different types of transactions. Now on page number 62, journal for different type of transaction. In that number 1 we are taking transactions for capital and drawings when new business is commenced. So everyone must write in your notebook. Give the heading. Journal for different types of transactions. Journal for different types of transactions. In that number 1, transactions for capital and drawings when new business is commenced. Commenced means start. You need to write only this thing, no such explanation. We will write only this thing, okay? So everyone must write in your notebook this thing. After that we will start the sum. First we are reading what is given in the text. From the viewpoint of accounting, a business entity or a firm and the owner of business are considered as separate. As I am daily telling, that when an owner is bringing any asset or goods or cash in the business, we cannot write the name of the owner. Instead we are writing capital. And in the same way, if he is withdrawing, then also we cannot write his owner's name, because owner and business are different, so we should write drawings account. Independent entities. So we as accountant have to write the accounts of the business, not the owner of the business. Always remember this. Owner invests capital in different forms at the time of commencement of business as well as the current business. This investment is made by owner in form of cash, in asset or as receivable debtors. As per the rule of the credit the giver, the owner of the business will be credited. Here owner's capital account is liability of business towards its owner. When the owner of business consumes goods or assets, cash or any other service for in personal consumption, it reduces the capital of the owner, that is known as drawings. Hence, since the owner is the benefit receiver, the owner's drawings account will be debited on the basis of the receiver's account. If the owner pays his personal expense from the business, that is also treated as drawing. Example, payment of medical bill, life insurance premium of owner's wife, son or daughter, income tax, etc. from the business. So drawings account is receivable from the business for its own. Now see what they are telling. When owner is investing in the business in a form of cash, asset or any type of goods, owner is the giver, so capital should be credited and the things which have brought have to be debited. In the same way, when owner is paying any personal expense or withdrawing that things from the business, then drawings account is to be debited, and examples are given. Yesterday I said life insurance premium is based on our life, not related to business, so drawings account should be debited. In the same way, if we are paying personal expenses of house, suppose if they are telling electricity bill of house is paid, then you cannot write electricity expense account debit. If it is of business, then we can write electricity expense, but if it is of house, then write it for drawings account. Okay friends, so now we are looking the transactions related to this. Now friends, on page number 102, that thing is given. So everyone on page number 102, transactions for capital and drawings, heading they have given. Write journal entries for the following transaction in books of Shubham. So for 6th question, let us make it for Shubham. Now I am rubbing the headings. Journal entries in books of Shubham. Date, particulars, LF number, debit rupees, credit rupees. Now let us start. First one, today date is given January 2014 and dates are given, but we will write it directly. Introduced goods of rupees 10,000, cash of rupees 15,000, furniture of rupees 5,000, debtors of rupees 10,000 and commenced the business. Now one more thing that you should know, that all these are assets. Suppose instead of debtors they are writing creditors, then it is our liability, then it should be shown on credit side. Other all the things you are bringing which are on debit side, only except creditors. This will happen when this will come when the sum is coming. Okay. So goods are our asset, goods are coming in. Cash is our asset, cash is coming in. Furniture is also our asset, furniture is coming in. Debtors are also our asset, it is coming in, and we are commencing the business. So all these accounts will be debited because they are brought by the owner, they are coming in, and owner is the giver, so capital should be credited. So we will write date in this way, 1/1/14. Goods account debit cash account debit, furniture account debit, debtors account debit to capital account. Now goods are of 10,000, so goods 10,000, cash is of 15,000, so cash 15,000, furniture is of 5,000, so furniture 5,000, then debtors are of 10,000, then debtors are of 10,000, make a total and write it here. See, this thing is important in journal entry, combined journal entry, that debit should be equals to credit. Now we will make the total. 10 plus 15, 25, 25 plus 5, 30, plus 10 is 40. You can make it the calculator, calculator is allowed, but this is just possible, so I am doing, okay. So capitals credit side 40,000. Now we will write a narration. B. What we have done, we have started the business with what? With these things being started business with goods, comma, cash, comma, furniture, comma, not comma, furniture and debtors. This is in our words only. Okay, we have started the business by bringing cash, goods, furniture and debtors. So all these are debited and the total is credited to furniture, capital. Okay. Now on 12th January, so I will first write the date 12/1/14. Okay, a very good transaction is given. Personal motor car sold for 80,000 and introduced 50,000 in the business. Now we will get confused then what to do. That our personal motor car is sold. This motor car was not of the business, so ignore that. Ignore that. If it was of the business, then it is sales of asset. We will write it accordingly. But here the word personal motor car is given, so underline personal motor car sold for 80,000. Underline that thing and make a cross on that. This is not related to business. What we have done, introduced 50,000 in the business. We are bringing 50,000 in the business. So we are bringing in the business what? Not clear. So cash. So cash is coming in the business of 50,000 and owner is the giver of that 50,000. So again cash account debit to capital account. Cash account debit to capital account, and the amount will be 50,000 only, not 80,000. And in narration we will make things clear. Being personal motor car sold and cash brought to business. Okay, that personal motor car is not of business, so for 80,000 we are not talking. We are talking only about 50,000 that is brought in the business. So cash is coming in and owner is the giver, so cash to capital. Next is 13th January, 13/1/14. We will read rupees 1,000 withdrawn from bank for personal use. We are withdrawing from the bank, so bank is the giver, bank should be credited. Now we are withdrawing for what? For the business, then cash is to be debited because cash is coming in and bank is the giver. But here they are writing we we are withdrawing for personal use. So we are withdrawing for personal use, that is our drawings. So drawings should be debited and bank is the giver for that. So bank should be credited. So drawings account debit to bank account 1000. B. Withdrawn from bank for personal use. Being withdrawn from bank for personal use. We are withdrawing from the bank, so bank is the giver, bank should be credited. We are withdrawing for business, then cash to be debited, but we are withdrawing directly for personal use, so cash will go at home, so drawings account debit. Now 15th one. Income tax refund of 500 of owner of sole proprietorship deposited with the bank of business. Now friends, first of all, again one more thing to understand, same like life insurance premium. Life insurance premium is based on life of a person, so it is drawings. In the same way, income tax, if it is a normal tax, then it is expense of the business. But if it is income tax, then it is also based on a person. So again it is a person. Now what we are doing, income tax refund. Income tax authority is refunding us the money of rupees 500 and we are depositing that check in the bank account of business. Income tax refund of 500 of owner of sole proprietorship deposited with the bank account of the business. So that income tax check refund we are depositing into the business accounts. So bank will be the receiver of that 500. So bank should be debited. Here bank was giver, so bank is credited. Now bank is the receiver of that 500, so bank is debited. Now as you know, income tax refund is there, and income tax is based on personal, so it is drawings. So it is from home. So we are bringing that check from our personal account. So owner will be the giver of that check. So capital should be credited, not income tax authority. Understand the thing. We are bringing the check to the bank account of the business. Bank is the receiver, bank debit. Now income tax refund is a personal thing. That personal thing is brought to the business, not taken from the business. If taken from the business, then drawings. If brought to the business, then it is capital. Okay, so bank capital. So bank account debit to capital account 500. B. Income tax refund check deposited in bank account of business. That personal check is deposited in bank account of the business. Okay. Now next, on 20th January, from the business, goods of 1000 and cash of 4000 are withdrawn for personal use. Now whenever you are hearing the words withdrawn for personal use, so drawings is debited. Now what we are withdrawing, what is going out from the business? Goods of 1000. So goods are withdrawn for personal use. Again it is outward of goods. Outward of goods can be goods withdrawn for personal use. Goods given as charity or donation. Goods by fire. Goods by theft. Goods for samples. Goods for advertisement. So whenever outward of good is there, always purchase should be credited. So here we are withdrawing goods for personal use, so purchase is credited, for personal use, so drawings is debited. Also we are withdrawing cash, so cash is also going out. Now understand the whole transaction. We are withdrawing goods and cash for personal use, so drawings is debited. Our goods are going out for personal use, so purchase credit. Our cash is also going out from the business, so cash is also credited. What goes out is credited, what is withdrawn, that is drawings. So drawings account debit. To purchase account, to cash account. Now we are withdrawing goods of 1000, so purchase should be of 1000. In purchase account it is 1000. We are withdrawing cash of 400, so cash of 400. Now make the total we are withdrawing 1400 from the business. Okay, do it in such a way. We are withdrawing goods of 1000, so in the line of purchase 1000. We are withdrawing cash for 400, so cash 400. Now 1000 plus 400 on the debit side of drawings 1400. B. Goods and cash withdrawn for personal use. Next, traveling expense of daughter rupees 1500 paid from business. Just now only we have seen that we are paying expenses of our house. Daughter is of our house, it is for personal. So we are paying that traveling expense from the business. So we will think that we are paying that cash is going out, cash is credit. That is correct. Now debit side we will write traveling expense. If you are writing traveling expense, then it is wrong. Why? See, if the traveling expense is of business, then traveling expense only should be debited. But this traveling expense is of daughter. So daughter is for personal. So we are paying the expense of personal house. Now that drawings is to be debited. Same like life insurance premium. If simply insurance premium is there, then insurance premium should be debited. But if life insurance premium is there, then drawing should be debited. In the same way, simply traveling expense is there, then traveling expense is only debited. But here it is of personal, it is of daughter, so drawing is to be debited. Drawings account debit to cash account. We have paid, so cash should be credited. 1500. B. Here we can mention everything. Traveling expense of daughter paid from business. Next date is 28th January. Okay. We are reading next. Furniture of 2000 purchased from Ganga Furniture Mart for house. Friends, read the whole sentence. Otherwise, if you are ignoring for house, then entry will be different. Read the entry. Furniture of 2000 purchased from Ganga Furniture Mart for house. If for house is ignored, then furniture is purchased. It is not purchase of good, it is purchase of asset. So furniture is debited and we have not paid the cash, so Ganga Furniture should be credited. But now for house word is written. So instead of debiting furniture, again debit what? Debit drawings. In the same way here also, if traveling expense of daughter was not written, simply traveling expense was written, then traveling expense to cash will come. And in the same way here also. Here also furniture is purchased for house, not for the business. So drawings to be debited and Ganga Furniture Mart is to be credited. But if for house is ignored, then furniture will only be debited. So understand this thing, my friends. This traveling expense was for daughter, so drawings. If traveling expense was for the business, then traveling expense is corrected. In the same way, if furniture is for business, then furniture debit. If furniture is not for the business, for the house, then drawings account to be debited. Drawings account debit to Ganga Furniture Mart account. How much? 2000. Okay. B. Furniture purchased on credit. Why I am writing on credit? Because we have not paid the cash. On credit for house from Ganga Furniture Mart. Being furniture purchased on credit for house from Ganga Furniture Mart. If friends for house word is ignored, then again furniture only is debited. But understand, here we are purchasing for house, so drawings is to be debited. Now the last transaction is yesterday's last transaction. Life insurance premium of 500 paid by check. And here read yesterday's last transaction, paid 2500 for life insurance premium. Now we have paid in the previous question. I am reading for the fifth question. Only word paid is given, so cash is going out, cash is credited, and drawings was debited because it is life insurance premium. So yesterday we have written the last entry, drawings to cash. Now today life insurance premium is paid, but it is paid through check, so bank is the giver, not me. So bank is credited, and as this is life insurance premium, so instead writing life insurance, write drawings. Drawings account debit to bank. Finance. In the narration. B. Life insurance premium paid by check. Total. Here it should be double line, as you all know. $10,000, $15,000, $5,000, $10,000, $15,000, $1,500, $1,400, $1,500, $2,000, and $500. Only take the total at last. It is no problem that your page is completed in between. Only take the total at last. Don't do like 40,000, 50,000, 1,500, 1,400, 1,500, 2,000, and 500. So once more, we are taking the explanation of all the transactions so that it will be very easy for everyone. But friends, for that you need the rules. If you are not aware of the rules, then again it is big problem for us. Okay, so this is the journal entries in the books of student. Now we are reading each transaction. Introduced goods of 10,000, cash of 15,000, furniture of 5,000. Debtors of 10,000, and commence the business. We are starting the business by bringing in cash, furniture, goods, and debtors, and we are starting the business. So first of all, remember that all these are assets or not. Sometimes instead of debtors, creditors is given. So instead of debiting the debtors, we will credit the creditors. Only that thing is there, otherwise nothing. So we are bringing all these assets. We are bringing the goods. Goods are coming in, goods debit. Bringing in cash, cash comes in, cash debit. Bringing in furniture, furniture account debit. Bringing in debtors, debtors account debit. Owner is the giver of all these things, so capital credit. Writing the amount of all these things, taking the total, so 40,000. So debit 40, credit 40. It should be done. Next number, not number, on 12th. Personal motor car sold for 80,000 and introduced 50,000 in the business. Now we are selling our personal motor car which is not of business. Which is not of business. We are selling that personal motor car and we are bringing 50,000 in the business. Now first of all we should ignore the previous thing what is written, that personal motor car sold for 80,000. We should ignore that thing. Now we should read 50,000 is brought to the business. So nothing is clear. So we are bringing cash to the business. Cash is coming in. Owner is the giver. So capital account credit. So cash and capital. On 13th, 1,000 withdrawn from bank for personal use. We are withdrawing from bank account of the business for our personal use. So bank will be the giver. Bank should be credited. Moreover, we are withdrawing for business, then cash is credit, but we are withdrawing for personal use. So drawing is debit. So drawings account debit to bank account. Now next on 15, income tax refund of 500 of owner of sole proprietorship deposited with the bank account of business. Income tax is a personal thing. We have paid income tax. Now income tax refund is there. Some amount is refundable to us. They are giving the check. That check we are depositing in bank account of business. So bank will be the receiver. Bank should be debited. Moreover, income tax is a personal thing which we are bringing to the business. So capital should be credited. So bank is receiver, bank account debit, and income tax is a personal thing which is brought to the business. So capital should be credited. Next on 20th, from business goods of 1,000, cash of 400 withdrawn for personal use. Now again, whenever we are withdrawing for personal use, drawings should be debited. Now we are withdrawing goods. Whenever goods are outward other than sales, whenever goods are going out from the business other than sales, then purchase should be credited. Also we are withdrawing cash, so cash is to be credited. So remember these rules. Whenever the goods are moving out from the business other than sales, that is by personal use, by theft, by rain, by fire, by advertisement, by free samples, or by donation, or by charity, always purchase is credited. So we are withdrawing for personal use, so drawings account debit. First don't decide value. We are withdrawing goods, so purchase credit. We are withdrawing cash, so cash is credit. So purchase, so goods are of 1,000, cash is of 400. Now make the total here and write it here. In the same way we have made the total and written here. In the same way we have made the total and written. Traveling expense of daughter 1,500 paid from business. Now if this travel expense was for business, was related to business, then traveling expense account debit to cash. But this traveling expense is paid for the daughter. So it is personal. So again, drawings account debit, cash account credit. Cash is going out, so cash will be credited. That is correct. But we are paying this traveling expense for daughter of the business. And daughter is not related to business. That is drawings account debit to cash. Now one doubt I may clear. Sometimes if you are writing here correct and here wrong, or here correct or here wrong, whole entry will be wrong. Okay. And sometimes if you are writing the wrong amount, then also your entry will be wrong. So I need correct debit, correct credit, correct amount of debit and credit, and narration also I will require. Then only I will give one whole marks. Otherwise I will give 0 marks for that entry. Remember this thing. Now on 28th, furniture of 2,000. Purchased from Ganga Furniture Mart for house. Read the whole sentence. Otherwise the entry will be wrong. Now we are purchasing the furniture from Ganga Furniture Mart, means we are not paying the rupees. Now this furniture is for house. So again drawings account should be debited. We have not paid the money. Ganga Furniture was just the giver. So Ganga Furniture Mart should be credited. But if the word for house is not written, so we are purchasing the furniture for business, then what entry should be written instead of drawings? Furniture account debit to Ganga Furniture Mart. But here we are purchasing for our house, so drawings account debit to Ganga Furniture. And the last, life insurance premium is paid by check. Now life insurance premium is again a personal expense, so it is drawings. We are paying through bank, so bank is the giver, so bank should be credited. In this way we have written all the journal entries and we have made the total and complete completed the question. Hope you all are understanding. If still you are not understanding, watch the lecture 2 or 3 times. Focus on the rules and then you will be little bit able to do this thing by yourself. So try it by yourself also. So that's all for today. Thank you so much.